certainly and I guess if I had to summarize it, to me, it's almost like there's a clear effort to flush the managed money out of their long silver positions on COMEX, and maybe it's to allow these commercial banks to cover at lower prices. I really do believe that this was kind of another one of the Hail Marys to flush managed money, which was very long, out of their long silver positions in particular. We'll see what happens tomorrow. I would guess we'll see the price start to move up again. Well, but let's not forget, in the case of the gold-silver ratio, that the market can stay irrational longer than we can all stay solvent. And that's really very true. Today is a good example. I mean, the market has been unbelievably volatile today. Gold was down $80 at one point, and about an hour ago it was actually up for the day, and now it's down about $27. So, you know, when you talk about this whipsawing, yet only giving back less than 1% on gold isn't the case right now with silver, which is down $2 to right at $32 or just above. Certainly and I guess if I had to summarize it, to me, it's almost like there's a clear effort to flush the managed money out of their long silver positions on COMEX, and maybe it's to allow these commercial banks to cover at lower prices. I don't know, but certainly today was one heck of a volatile day, not just for precious metals. I mean, look at the markets themselves. The Russell 2000 index officially has entered bear market territory for the first time since 2022, and NASDAQ down almost 6%. And, you know, the markets are getting clubbed. And then you have Secretary Bessent saying, yeah, that, the collapse of the market is not a MAGA problem. It's the MAG 7 problem. And we talked about last week on your show that the MAG 7, when you talk about the hedge funds having their lowest allocation to the MAG 7 in over 2 years, you know, things are certainly starting to get very interesting, as they say, which of course is the Chinese curse. When you live in interesting times, these are not for the faint of heart, for sure. Well, let's not forget about the dollar, which has lost 35% of its purchasing power against gold in less than a year. And so it's not just the volatility we see in silver, but the volatility in the dollar too. And that's the thing people need to remember, is that we're valuing everything against dollars, but gold's rise of 35% just since the beginning of the year would signal that the dollar has lost 35% of its value against gold in the last year. And now you have the Fed pricing in a 70% chance of rate cuts in June, and the yield on the 10-year falling. Again, you're looking at the potential of dollar weakness going even further and further and further. So, I mean, you make a very valid point, but I would also add to that this fiat system, as you mentioned, is beginning to show cracks. And it's you know, this global confidence that's underpinning the dollar's dominance seems to be wavering a bit, especially with what Trump is doing with the tariffs and what the markets are saying. And when you see the Russell 2000, which is the broadest measure basically of the economy, all the small caps, the businesses getting hammered, I think it's time to buckle up a little bit. I'm not making a statement on where I think gold and silver are going, but I'm just simply saying that the markets are telling you right here and right now that they're concerned about what's going to happen the rest of the year. Yeah, you know, we don't really. I mean, there have been articles, Bloomberg in particular today, I guess it would be today or yesterday, I'm not sure based upon being in Europe, but I read an article that I read today on Bloomberg that, you know, more or less said, well, you know, now that Trump said gold would not be tariffed, as we have said a million times, is that they're not going to tariff gold and silver. That was a ruse. That, you know, you saw the price fall off, and now you're going to see the exchange for physical, you know, all of this stuff is going to revert, and metal's going to flow back to London. I don't believe that to be the case. Look, we've seen over 15 million ounces stand for delivery on COMEX this year, and it seems to be driven by some form of a whale. I mean, who the heck's got that kind of money? Who's got that kind of firepower? Question is it a foreign government? Who the hell is seeking physical delivery? And again, it's the rising distrust in the U.S. financial stability. I don't think this is going to end. At the same time, there was just an article coming out that says Germany, again, is now very, very concerned about keeping gold in U.S. vaults. They're concerned over the Western custodianship. And so, no, I don't think that we will see the metal flow back to Europe. And I don't know that we're really going to figure out what this is all about until we figure it out. There haven't been any clues really given other than we're supposed to believe it's all about tariffs, which I don't believe. That's what Bloomberg wants us to believe. I don't believe that it is. I think it's more along the lines of removing counterparty risk, and whether it be Germany removing the counterparty risk or the U.S. removing counterparty risk, reshoring, holding it in your hands. I think that's really what it's coming down to. It's about having it in your hands. It's the old saying: if you don't own it, if you don't hold it, you don't own it. Maybe that's really what it's all about. And no more paper trusts. I want it in my possession. Yeah, well, they repatriated. They tried to get their gold back in 2013, and it took until 2017 before the gold was actually sent back from the U.S. vaults. But the bars that they had sent back had different serial numbers on them, and so the bars weren't the same ones that they sent, which caused a whole lot of concern that those bars they had done something with those bars, and it took them 4 years to come up with bars to send back to Germany. What does that really say about custodianship? I mean, it's supposed to be the bars that were put in there, the bars that are returned. So I think it is a very big deal, 100% so. But it's not just about gold, too. I mean, it is silver as well. China is a good example. We've seen just in the last week in Shanghai, their vaults grew by almost 53,000 kilograms of silver in the last week. Their total holdings are now up to almost 1.75 million kilograms. So you have 10% year-over-year increase in China's silver imports. So it's not just gold, it's silver as well. And it's not just the U.S., it's not just Europe, it's China, it's India, it's Russia. There is a massive drive away from promises and into things that are tangible in your possession, and Germany is a good example of that. But if you look at, you can see this everywhere. I think that this is something that people should really try and understand. What Trump is doing here is eroding confidence. Now, I'm all for him and what he's trying to do, but he is eroding confidence on many levels by many of the players that will start to say, you know what, maybe we need to rethink whether it be the United States or anyone holding our assets. We'd like them in our own possession. And that's kind of what you're seeing, this weaponization of money through sanctions, through asset freezes, or any politicized financial tool like a tariff. These are backfiring as far as I'm concerned as trust is collapsing. So, the question is, are these diplomatic acts or are these signs of desperation? I don't know, but certainly something to keep an eye on for sure. What you're basically seeing is that sovereignty begins with no counterparty risk. And that's really what this all boils down to, is that you can think you have sovereignty, but if your positions are filled with counterparty risk, how sound is that sovereignty? So I think that's kind of what it's coming down to. And his actions, whether they be benefiting the American public or not, that's, I'll leave that up for debate. What I will say is that a good portion of the world believes that it's not. And so you're seeing, that's why I say, is this the act, or is the world viewing this as the act of desperation of a declining empire? I don't know. Are they? Kind of feels that way when you look at the pushback that you're seeing, especially here in Europe. They're very angry. And, this is just beginning. See, this is the first day that the tariffs were announced. And the only other thing I'd like to say, when we talk about gold at all-time highs yesterday, above 3150, and here we are today with all this volatility at 3110 or so, yet there's eerie quiet in the market. There's no headlines. There's no retail euphoria. Quite to the contrary. This is not a bubble at all. this has been stealth accumulation. And the funny thing is, to your audience and to you and I, well, what do you mean stealth? Central banks are gobbling it up, right? And all the big money is standing for delivery. But take a step back from YouTube and try and find that. Watch Fox and, spending a few days in Rome last week, I was stuck with the only American speaking channel was CNBC. I wanted to pull the hair out of my head, but I watched it for a while. And I mean, you wouldn't know that gold even had a heartbeat as it's continuing to rise and rise and rise and rise. And so it's very interesting when, people are wondering, is 3,100 the top? Some analysts calling it top. Well, you got banks right now talking about 4,500, and including some very large banks like Bank of America and Goldman Sachs. So, how are we near the end, or is it just beginning based upon the lack of retail involvement, the lack of no headlines on the media? This isn't a bubble at all. So yeah, I think this is a natural pullback. It's gone straight up. It needed to exhale a little bit. Certainly did, but yet you can see a market that was down $80 this morning has roared back 50. In fact, it was up positive at one point about an hour ago. So it's volatile still, but here we are, and not even down 1% in gold after an $80 decline earlier in the morning. Crazy times, to say the least. And not a lot. One of the things that I found interesting, I kind of detached for a few days, so I power read over the last 2 days. One of the things I found interesting was 2 days ago or 3 days ago, you had Japan, South Korea, and China held a trilateral meeting called Economic Dialogue. And it's the first one that they've had in over 5 years. And they are pledging joint responses to the U.S. tariffs. What I found very interesting about this regional trade cooperation and supply chain alignment, as they call it, is that these China and Japan are two of the top foreign holders of U.S. treasuries. And they're showing a clear pivot away from the U.S. economic influence when you see these countries start to join together. It's something that should certainly be noticed. And again, here in Europe, we can see they're very uneasy here. Their trust in the West is totally eroding. And one of the things that there was a long article that I read just the other day here in Europe, and is that you have nations not only racing to get precious metals, but also all critical minerals from copper to zinc to nickel. There's a drive to get tangible assets globally. And when you see Japan, China, and South Korea come together and say, hey, we're going to work together to sidestep U.S. sanctions and U.S. tariffs, that's not a good sign unless, look, you could look at it that way, or you could look at it like Bill Holter does. I had a long talk with him, and he's like, look, between the Doge cutting, the layoffs, which, the U.S. government their spending accounted for over 30% of GDP. You're laying off thousands of workers. You're putting on tariffs, which will slow down business. You're all of that money that's been in the system the last several years, which you could argue has been illusionary, certainly seems to be coming to an end. And what does that mean for the markets? Is that why the markets are getting crushed today? Do they see this coming? Are they trying to, look at what Percent says? This is not a MAGA problem, it's a MAG 7 problem. Are they trying to bring on a controlled demolition of the markets? Well, and bring rates way down because a recession is coming? Well, that's what Bill would say. There's a million different viewpoints that you can take on this right now, but the bottom line is that you could argue things are just starting to get interesting. Things are just starting to get concerning. So other than that, no. I mean, I guess the only other thing that I would say about today's move is that I really do believe that this was kind of another one of the Hail Marys to flush managed money, which was very long, out of their long silver positions in particular. We'll see what happens tomorrow. I would guess we'll see the price start to move up again.